Thank you very much. You'll tell us how much you sent to Rivers, Edo State later. DG.
Let me quickly respond to the two comments on the master plan, the ownership aspect. The master plan is actually owned by the market. When we're preparing the master plan, it's the entire market that came together, including the stakeholders, that brought the document. So it has already been cascaded to the, to that lower level. It's very critical, Majority Leader, for us to have the ownership at that top level. And I give you an example. If we want any legislation to be changed, it is only the legislators that can do that. If we want the document to be mainstream into the government policy, it is only at the executive level that it can be done. And the issue of whether we should continue to implement, we have been implementing it, but we believe that where we want the market to be, we can't reach that level unless some of these legislations are being changed. And on the issue of risk of pension fund, I agree with you. We have to be very cautious about some of the risk element. But one way of the risk in that sector is amendment of some of these laws. And I give you an example. If somebody wants to invest in the housing sector, the existence of the foreclosure law that we have in existence cannot allow somebody to do that. And that will pose a major risk element, to that. So the only way we can de-risk that sector to be able to encourage those investments is for us to be able to amend those laws.
DG, thank you. Thank you, DG. I'm sorry. I'm told we can't go any further. May I just wrap up all what we've heard? And it seems to me that in the main, the panel seems to be agreed that there's a lot to be done at the state level, that there are quite a number of things in the way of state governments in getting funds into those states for development. It seems there seems to be a consensus that the state government should not be looking at pension funds because people are concerned that those funds should be safe. I think a debate probably will ensue later on between the Majority Leader and Honorable Wada on federalism, because Honorable Wada seems to think the state should be inhibited. It seems to me the leader is a great champion of another form of federalism where we get a lot more powers in the hands of the states. And the last point that was raised is that the way the states can really get this money is by being responsible, which they all seem to agree they have not been here at all. And they say that they have to demonstrate that they are serious by being open, accountable, and behaving the way the market would expect. I think I've summarized the views very well, and I guess we can take a few questions. I don't know who handles that, but Victor, I have to start from honorable members, or that will all be thrown out. Yes, sir.
Good afternoon, ladies and gentlemen.
Can you just be 30 seconds?
Yeah, without wasting time. We are focusing on states and their viability or interest in the capital market for the infrastructure development. I want to ask, there are states by every that are not viable, because when we mention states, we focus mostly on Lagos as a state. But there are states we know whose population is growing at a rate, and meanwhile there are clearly poor infrastructure, both educational, health, and general infrastructure for development, and you are prescribing that they should go ahead and increase IGR. There's no strong workforce, there's no economic platform where they can generate the funds for them to develop their infrastructure. How do you subscribe that if the population is growing, because population is our focus on our strength, but the population that is growing is not educated population, they are not financially independent, everybody is waiting for FAC to fund the state. Most of the states and the local governments are not working, because when we're talking of impropriety of funds, the state governments have been appropriating both the state fund and local government fund, which is at 50 52 or 52 to 48.
Thank you, sir.
So
Sorry,
we
sir.
want to find out
Sorry,
how
sir.
this can function.
Sorry, sir. Thank you. Victor, can you? Yes. We'll just take about 3 questions and then the panel will respond. That basically is some states are not viable, and as the distinguished member had mentioned, states seems to have reached their end point in terms of borrowing, and the people seem to have been overtaxed. Yeah, Victor.
Thank you very much. I think this focus on states is very important. I think what we need to do, especially people have talked about IGR, we've talked about states getting to their limits. There's another way that will enhance both IGR and also give the market a new breath of fresh air. That is by looking at municipal instruments. I'm talking about the states don't even need to go to the federal government or look for somebody to sign anything for them. They can make laws within their own states that will allow them to do simple things like building a market. Have somebody like me come in and say, you know what, you want to build a market, what does it cost and all that? And try and develop municipal instruments that will be sold locally within that place. First of all, everybody investing that markets make money every day. And by so doing, you will have states that will be able to, you can imagine how many markets can be built quickly.
Thank you, Victor. We get the point?
Yes, we get the point. Okay.
Municipal bonds sold municipally. Yeah. Yes, sir.
Thank you very much. Please, I have 2 questions. One is practical aspects, and one is to contribute to this question. This program. Please, I'm very sure that all these loans available, they are all profit making loans, and most of our governments are not into business. Can't we think of a department in a government that will be scheduled with the responsibility of business and engage with a partner, getting this loan and invest in a business partner with a foreign or indigenous investment? I think a profit will be coming that can now be channeled towards payment the salaries of the civil servant. Second question is that practical aspect. In the recent lady of the crusade devastation of the economy, I key into it. I went to the farm and opened up 8 hectares of land to farming. In the very soon, the product of my agriculture will be coming out, and I'm very sure I can sell it in the open market in my local area because I will flood the markets and the price of the agriculture will come down. Okay. Can't we think of something by the government so that it can be a very big one that can accept my own product for production, for processing that can be...
Understood, sir. The honourable or distinguished member, is looking at 2 things: public-private partnership, I understand it, and whether state governments should have something like commodity boards that will buy goods from them. So I'll ask the panel just maybe 2 questions. I don't know. Okay. All right, sir.
Just to comment on the municipal board, this is an excellent idea. My also thinking is states should now move towards revenue bonds. It has happened. You remember when we had the Sura market in Lagos, when we had the Lagos Island issue bond and build Sura market, it was quite successful. In 1995, we had 3 local government areas in Kano. They came to the market issue bond and they reactivated Sabongari market, and the issue was successful and payment was also done well. So I think the emphasis is states should now and local government should be looking at revenue bond. In the early 80s, 90s, that is what we used to know in this market. But now that everybody is now relying on IGR, and I think that's why we're having this issue. So for me, the solution is revenue bonds.
Well, thank you. I'm just going to address the first couple of questions, and I think we all talked about it here. Again, it brings me back to my earlier point. Everybody has talked about IGR, and I think that was one of the first questions. Some states are not viable and the rest of it. It brings me back to my first position. Whichever way you look at it, whichever way you try to skin it, if you do not change the structure of government itself, it's going to be difficult for you to even improve this idea that we're talking about, that is so, the states are so dependent upon. Yes, you can increase your drive, but are you going to get to the threshold that you need to make you autonomous in the market? So for me, again, I believe changing the structure of government. IGR, when we talk about IGR, changing the structure of government, we're talking about, in a way, you're talking about resource control. When you open up, when you devolve powers to the states, you're reducing the burden on the federal government. When you reduce the burden of the federal government, you're freeing up more money by the Revenue Mobilization and Fiscal Commission. You're freeing those monies to the states, which will allow them to generate more money for economic growth. So autonomy of the states is very important, very key to what we're talking about. There's no way to get around it. It's about the structure. You can't build something on nothing, and I truly believe in that.
Yes, sir. We'll just take one more. I'd like to make this contentious.
If I may just mention this. Bailout funds and all of that. In terms of the purpose of this discussion, I think those bailout funds were simply for recurrent expenditure, those for salaries and the rest of it. We're not talking in terms of infrastructure. That still does not cut it. We need to have independent states.
The first technical session there of the two-day stakeholders forum on realizing the full potentials of the Nigerian economy through proactive capital market legislation, an occasion organized by the National Assembly Joint Committee on Capital Market and Institution. And this panel has been looking at enhancing long-term fundraising opportunities for infrastructural development for state governments. Just the first technical session of the day and part of our coverage of this event. But this is where we will be bowing out for today. We'll now take you back to Lagos for our regular programming.
This has been a Live Channels television event.